Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 2nd of April 2016 and we're providing our gold and silver update for week ending the 1st of April. Gold rose in US dollar terms last week by $6 from $1,216 to $1,222 an ounce, having been as high as $12.44 and as low as $12.10. In sterling terms, gold fell by £2, and in euros it fell by 16 euros. Silver fell by 12 cents, from $15.17 to $15.05, having reached a high of $15.46 and a low of $14.87. In sterling terms, it fell 16 pence, and in euros it fell by 0.37 euros. The gold to silver ratio rose from 80.2 to 1 to 81.2 to 1. The Dow Jones closed on Friday at 17,792, up 107 points on the day and up 277 points on the week. And the NASDAQ closed at 4,914, up 44 for the day and up 141 points on the week. Brent Crude was almost $2 down on the week at $38.67, and US Light Crude was down a little over $2.50 at $36.79. The dollar index stands at 94.62, down 1.65 on the week. Gold peaked on Tuesday and then gradually descended, with a pickup on Thursday and a sharp fall yesterday when the non-farm payrolls were announced, and then recovered some $10 just prior to the close. Silver maintained some reasonable levels for most of the week and then fell sharply when non-farm payrolls were announced, actually falling more than $0.50, but recovering a little towards the end of trading. As we suggested last week, there would be some consolidation this week with a lowering trend, which is what has occurred, and prices, to be fair, are well within expected bands. Again, technical analysts believe that silver is going to attempt to push towards $16, though we feel that the 20-cent fall below $15 and witnessing lower highs and lower lows this week may in fact be more bearish than bullish. There is certainly resistance for gold at the 1240 level and support at the moment at 1210. It is important to note that short term we may very well see stock markets rise as the likelihood of interest rates going up in April is limited, thereby redirecting capital back towards the equity markets and away from gold. Now, depending on how much of this takes place, it may indeed provide a good opportunity to purchase gold should you be light in your portfolio. But we will have to wait and see by how much it dips over the next couple of weeks. At present, we see silver continuing to move in line with gold, though we have received some tentative reports, which are as yet unconfirmed, that property prices in China are actually beginning to improve, and that its policies may be starting to improve economic growth. But it's too early for us to predict or confirm this at present. If this does occur, then it is possible it will be beneficial for silver, but we still see price weakness over the next few months. Interestingly, A.G. Thorson of Gold Eagle News wrote last week, quote, "If prices bottom this spring and then make a higher high above the March the 7th 1287 top, I will abandon my bearish view and switch to a bullish posture. Otherwise, gold prices aren't expected to bottom until late this year or in January of 2017. Unquote. Meanwhile, we continue with our normal position. that should you be underweight in metals in your portfolio, then you should at least consider purchasing on dips. If you are not underweight, then there may be better times ahead to make additional purchases. The same applies to silver. For those who are living in countries other than the US, which are adopting negative interest rates and feel that rates may go even lower, should bear in mind that the acquiring of gold and silver should be considered as a hedge. We still see gold and silver falling from current levels in the course of the coming months. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at www.illuminatisilver.com and look at our Facebook page, which is updated daily at www.facebook.com/illuminatisilver. Disclaimer: Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views